that'll bring us to our last thing here that
Okay.
I want to touch on, which is Bitcoin and your price predictions or your analysis for the Bitcoin chart. To me, has been invaluable. It helps really with my own thinking. Um, I do want to lead with one thing
Sure.
because I'm extremely annoyed with myself, um, and that is I go through all this trouble to build indicators for myself that tell me what the liquidity conditions are, and then
And
for
then you don't
some
use them.
reason I don't freaking use them. My signal over here was saying, let me just pull it up on the screen here real quick. All right, I know it's a little crazy here, but I had a signal over here. Actually, let's look at the SPY here. It'll be more clear. So here I have a signal that says, "Hey, we have a this red triangle means a pullback in liquidity," and I don't know why I don't listen to these things. This day where I got this, I'm looking at the options for the SPY at this level, and I talk myself out of buying them. I bought sushi that cost as much as the options for the SPY, and I could have bought them and made a bundle. It drives me crazy. Do you find yourself like not listening to your own analysis?
100%. It happened with Nvidia in its first pullback. I had pegged the retrace somewhere about around $90, right above the 200-day moving average, and I think the low that day was $90.69. And I missed that. I missed that bottom wick opportunity for sure. And it happens all the time, especially as traders. I think it even happens in automated strategies where your strategy is waiting for one more indicator or one more confirmation, and you just miss that little window. But there's always the next one.
Well, this, yes, you're right. There is always the next one. All right. So for me, just a quick look over here. What I'm looking at for Bitcoin, actually, this is not the best chart for that. Let me pull it up. All right. So I'm looking for price to get back to get down to here to the 50K level or around the 50K level. But anywhere around here is where I'd be thinking for a first low in like if there's going to be a bottom at all, it could be around this area here.
Mm-hmm.
Especially since for the dollar, so we got that bounce. I know we talked about this last week. We got that bounce in the dollar at the 100 level.
Yep.
We've bounced again, but it's always about the lower high, right? So the lower high over here didn't break up to this level, which is what I was sort of my doomsday scenario, like short-term doomsday scenarios that we get back up to 102. We
Yep.
didn't. So my question is if this bounce is the bounce that leads us there, if this is the high or low. But even if it is, it does, to me, suggest that we're going to be moving sideways through this area before we then eventually break down below 100, which is then bullish for crypto and for assets. What are you thinking as far as price for Bitcoin?
I think that might coincide with the next potential bounce. I think we are going to pull back a little bit further on Bitcoin. If I could share my technical analysis on this.
Yeah, let me pull it up.
So the chart that we keep referring to is the one I've had open for 9 months now. So the main range that I've been paying attention to is that first retracement back in January of 2024. And I've been watching this pullback the entire time. We touched or literally wicked the 0618 retracement on Bitcoin. And since then, I thought we might be headed for positive territory. But this little range of pricing here shows me that we did not hit a new higher high, which is kind of what I was hoping for. But even if we had touched the 70,000 higher high, we still need to get past this trend line in order to really confirm that we're going to be moving into a new range. So this pullback again is, I think could have been fairly well expected once we broke below the 8 EMA on the short-term basis. Once we printed this reversal right here. So for several days since then, I think it's been a fairly obvious trend. From here, however, I'm not entirely sure where support shows up. I'd like to say we come back here and retest the 49.3 level, because that would sort of give us some confirmation that the 0618 retracement is the pullback level traders are hoping for people to start accumulating from here. But I'm afraid to say that we probably pull back even further than that to hit the long-term trend line. And that pushes us closer to 44.2, somewhere around there. So I'd like to see how we respond to this this overall trend line right here.
Yeah, it's that wick from the what was that? August 5th. That
Yep.
wick down. So wicks are like wicks tell the story.
Sure.
And so the fact that we're revisiting right now, if the next candles right now, we don't get strong, significant wicks like we saw then it means we're, I think Linda Raschke calls it eating the tail in a sense, and that we are chewing through that support, but to the downside. And if that breaks, well, then I also have like 40K as the low end as to where I'd expect the next support to be,
Yep.
because there's not a bunch of support in these areas. The Peter was asking like, what is the what's causing Bitcoin to sell off? My flippant answer is always it's liquidity. Liquidity is pulling back. Like global dollar liquidity is pulling back, and we're seeing that, show up in all kinds of different assets.
I was going to refer to the global liquidity index here because we've actually been rising pretty steadily since even that last wick on Bitcoin. But generally, through this whole downward accumulation phase, it's been slowly marching upward. And we're well past that resistance zone we were previously monitoring around 91.5 on the index, and we're now at a point where we're at 93.7. So as we march higher and higher, the availability of capital seems to be growing, which I think is a good case for the idea that there's plenty of cash on the sidelines ready to test that support level and hopefully can confirm a reversal from here. Maybe one other indication I would probably point out is that the correlation of crypto to the S&P 500 is growing over these last several weeks here. If we just look at the correlation over a rolling 20-day period, we had reached almost 90% correlation at the beginning of August, kind of pulled back a little bit. It seemed like it was acting a little differently as we retraced in the S&P 500. But now as markets start pulling back again, that correlation is rising again. We're at 70% correlation now.
So the I think this is one of the mistakes I made for myself. We'll see long term if what that does. But I was also looking at liquidity the way you're doing over there, but I forgot to take a look at my other. So in addition to my liquidity indicator that you're right shows an increase in M2 money supply, I have a gauge down here that detects basically credit issuance and for commercial institutions, and that when I get higher highs on there, it means that there's a tightness within the credit issuance. And so liquidity is only bullish if it actually gets to places, right? So why do we see inflation explode? It's because the money that was being printed was staying within the financial markets. So asset price inflation occurred and housing price inflation occurred because that's where the dollars were touching, but it wasn't touching, your cell phone. It wasn't touching the food at the grocery store and that sort of thing. And it's when the liquidity poured out and started touching those areas, well, that's where you get that inflation. I tell my kids all the time, if you print $1 billion and keep it in your basement, nothing happens to the prices around you. You start spending that money in your neighborhood and giving it to people, well, prices are going to rise.
Mm-hmm.
And so here the liquidity was there, but it wasn't actually getting into financial assets and into crypto, which is why we had this sort of resistance. Like we have over here. Actually, let me show it to you on this way for NFCI. So this is one of the financial conditions index from the Fed, and we had this wobble up. This, I know it's small, but it is a higher high, very tiny, but it is a higher high over here. Two of them happened. So we had it over here and then over here again, and which is just showing this volatility, minor volatility within the financial the credit space. And if you take a look at other assets as well, like if you take a look at what's going on with China, with Japan, with some of the European countries, there is wobbling happening within the credit space. It's not down. It's not like terrible, but it is a wobble. And if we get a bottom within that at all, well, then it's like VIX at 12. We could get these spikes in credit issuance, or like lack of credit issuance. So when I see Bitcoin pulling back as liquidity is going up, then I know, for me, that tells me the liquidity is not getting to the assets I expect it to get to, especially with gold up. Gold hasn't fallen, right? So we know it's not a structural thing, or solely a structural thing. If gold is still up, that means there's still a bet against the central banks and the health of the financial systems. And so it makes sense that we would see that in Bitcoin as a pullback in that speculative asset, whereas another safe haven asset like the Swiss franc or gold would stay up. So
Copy
we'll
that.
see.
Yeah. Well, I think in general, I tend to be more technically focused. So at least for crypto, the best indicator I have is where price starts to support, where price shows up on support and resistance. So I want to see where support is as we continue to retrace here. And then I'll be waiting for confirmation above some short-term moving average to see a continuation from there. And then, as usual, we want to see higher highs and higher lows before we really know where we're going.
So that's what I was going to ask. So even if it hits, let's say it hit 40,000, you're not a bottom picker.
Yeah, it's hard to catch price on its way down unless you're truly confident from a fundamentals perspective. Like I'm trying to catch Nvidia on the way down right now, but I understand the fundamentals of Nvidia. It's harder to understand the fundamentals of crypto and the speculative effect that takes place in traders' minds here. There's not something I can relate to from a fundamental perspective that's going to show up in, like in Nvidia's case, as I'm catching that falling knife. I know that the fundamentals I'm looking at now aren't going to show up for another 2-3 months before price starts to pull back, retrace again and head to the upside. For crypto, there's nothing for me to really rely on except for how traders react to market conditions, global conditions, and overall price action. So I'm more hesitant to jump in as it's making its way down.
Fair enough. Okay, that makes total sense.